Hello guys, welcome to another weekly breakdown. Welcome to another weekly candle breakdown. I mean, full 1 week breakdown. Last time we did the weekly breakdown of this candle. Here we can see the weekly was clearly making higher highs and higher lows, so it was easy to go make this higher high, right? To continue buying because of the huge buying pressure right there. But this week it's something different. There is a weekly gap. It is not officially the fair value gap yet, but this is called something like a rebalance in price. It has to come and fill up this gap. This is not a fair value gap yet technically, but most of the times the price has to fill up the gap before moving up, if it makes sense. So here clearly this was one of the scenarios. By looking at the candle, just looking at the candle, I can say that. And there was also a supply zone. There is a supply zone. Obviously there will always be a supply zones and demand zones, but whichever supply zone the market is respecting, that only counts, right? If it's bullish, the supply zones is invalid, it seems, but in this case, just for knowledge purposes, I have drawn this. And if we are bullish, our next draw of liquidity was this one and this one. This one is a bit far away, so let's delete this one for now. This is our next draw of liquidity if we are bullish, and there is also a supply zone, so we have to keep that in mind. Keeping that in mind, now we go to the daily time frame. In the daily time frame, we go, as I've shown you in the weekly time frame, there was a huge gap to be rebalanced, right? In the daily time frame, we can clearly see there is a huge fair value gap here. First fair value gap here. So before going up, look, first of all, ask yourself, think in market perspective, okay? For once, literally the market has gone up loads. For days it's going up. The market cannot go up forever, right? Whoever is buying here, their stop loss has to get hit at some point in time, so that the market can continue making its moves and continue creating market structure like higher highs and higher lows. So here a smart trader would, obviously he will not go against the trend, he will look for buys. But if the market is showing signs of going down, then a smart trader here, after seeing Monday and Tuesday, if there's no signs of going up, then probably looking for sales is a very, very good option here, which I should have done. Like you can see, there is a fair value gap there, right? Monday filled up half of it, Tuesday filled half of it. Now most of the traders, like even me, I thought that Monday and Tuesday might be the low of the week, and now we might continue going with the trend. But look, ask yourself, look at the movement. So it's so bullish. There were so many bullish candles, and it's not enough. It makes sense to go down and literally take some more liquidity, and at least if you draw the fib level from fib tool from here to here, from the low point to the swing low to the swing high, at least a 50% retracement is anticipated, right? That's a comfort zone for us to take a trade. Now to anticipate, now the move can start happening to the upside again. So if I show you, Wednesday literally went down and filled up this fair value gaps here again. This is the higher time frame. I'll show you the lower time frame also, and there is also fair value gap. There were 3 fair value gaps on the daily. Literally all fair value gaps got filled to the T. Boom, boom, boom. Everything got filled up perfectly. And now, to be honest, on Thursday I was looking for buys, but the market kept continuing down to the downside. For now I am back testing. The whole week was to the downside. Now you can see, now it makes sense to go up, because if I draw the fib level now, it is literally retraced to the 50% level, and now it might continue making a higher high again, because now the retracement has happened after this huge up move. At least 50% has come down, and also the 4 hour has changed character. Now let me show you the lower time frames, like 15 minutes, the whole week. Quick recap what I've done. So the daily time frame was this. While backtesting, we can't see the daily time frame because it shows us the move earlier, right? That's why the backtesting is a bit, to be honest, a little bit not ideal for me. But now let me open this. Obviously this previous week high and low will be on Friday, because this previous week highs and lows are the previous week highs and lows, obviously. So this was so close, right? Previous week high was so close. So if it went and took it out directly, went and take it out, I would not be shocked. But the market can do anything, so we have to see what it does, right? But the previous week high or low, if it's closer, then it makes sense to go and take that first. That's how the market operates. And if I go to the hourly time frame, the hourly time frame, obviously these zones, this 4 hourly fair value gaps are from Friday, so ignore this. Not Friday, on the middle of the week. You will get to know why I have drawn that. If I show you here, the chart colors are not clear on my phone, man. Here we can see Friday has literally started to reverse now. Monday till Thursday was huge bullish, but now it's starting to reverse. And if I show you, if I also draw the M15, there are several trades I took. This was on Wednesday, this was on Thursday, this was on Friday, and I will show you the results. Monday and Tuesday literally were no trades, and also there was news. Monday there was no such high news. Tuesday there was USD retail sales. Wednesday there was CPI, GBP CPI. So CPI literally went down. CPI usually goes down in one direction, and it went down. Whereas Thursday there was unemployment claims. Friday there was no news on Forex Factory, but for economic calendar, my FX book, there was retail sales, which affected the market. So we have to look at both. If I go to the markets from 1 hour, you can clearly see Monday I was I was not looking for anything. Monday my bias was not clear, because it also makes sense to go up and take the previous week high, and it also makes sense to go down then. And if I was looking for buys, my demand zone, this would have been my demand zone, and maybe I would have taken the trade. But you can see 12:30 the move happened before us. The move literally happened. Yeah, I was watching at this demand zone. The move happened at 12, which is Frankfurt session, and we don't take that. As you know, that's not our strategy. Our timing is 1:30 London Open. So we missed that move, but that was a winner. Monday was a winner, but we missed that move, obviously. So now the previous week high didn't got taken. It went so close to the previous week high. Tuesday didn't swap the Asian low, so it was not valid. If I go to the 15, and there was no strong demand zones to buy from. I marked a demand zone here, but it was not one of the best zones, to be honest, so didn't took the trade there. And Tuesday also we didn't took any trades, but our analysis was, to be honest, at point, but we didn't took the trade. Tuesday literally dumped. From Tuesday the market started to dump, and on Wednesday I thought that now the retracement has been done. Monday and Tuesday has been retraced. Wednesday might be the move to the upside, because our higher time frame bias is bullish, right? I showed you the weekly daily is going up, but just because they are going up doesn't mean that it cannot have a short-term reversal, right, to sweep liquidity. There was a demand zone here, so I was looking at this demand to buy from, which obviously didn't got respected. I will show you why. Everything will be answered. Look at this. This is the CPI candle. I was shocked by this candle. Literally 11:30 there was CPI news. I was looking at this demand right here. This demand was a strong demand, because this caused the break of structure to the upside on previous Thursday, as you can see there. As you can see, left side, Thursday there was CPI news on Wednesday, which literally went down, and CPI usually tends to go in one direction. We know that, so we use that in our advantage. And when the market came to the next demand, which is here, this is also a very strong demand zone, because this caused this break of structure here, clean. So when the market came here, it gave us a small rejection, like a small hourly wick. After seeing that wick, I went to the 15 minutes and the 30 minutes and 15 minutes. I saw what I want to see. this is exactly what I want to see. Inducement, which makes the move even stronger. Inducement happened before inducement happened at 12 p.m. obviously, and this was our timing. That's why I took the trade. A bullish pin bar at 2:15 London session, took the trade. It was a break-even trade. It was my target was 1:3, but it was a 1:2.4. You can see, if I was taking this in a challenge and using Umar Punjabi's strategy, then this would have been a winner. But in the long term, in a funded, it would have been a break-even trade. So Wednesday was break-even. So now we go on to the Thursday. Let's see what Thursday has done. Obviously, while doing all of this, we are correlating this to DXY, but while backtesting, that's not, I cannot show everything in the video, but yeah, I am correlating it with DXY while taking the trade, don't worry. And for now, can't see good opportunities, to be honest. This Thursday I was looking for sales. After seeing huge selling momentum like this, it doesn't make sense to look for buys. Now I'm looking for sales, but the Asian high didn't got swept again. One more problem is the Asian high didn't got swept again. I was looking for buys. Sorry, I was looking for sales. The Asian high didn't got swept, so didn't took the sales, and Asian low got swept. There was inducement here on London session. Took the trade on London from this demand right here, M15 demand, because of this candle. You can see here easy the last bearish candle to spot the demand zone, and also this is a valid demand zone because this caused this break of structure here, if you can spot. So this was a change of character, so it was more stronger. And also we have seen this rejection. Always we wait for this 15 minutes rejection. Took the trade, 1:3 risk to reward. Even this was a break-even trade. This was a break-even trade in my funded. If it was a funded and if it was a challenge, it was a win. If I was targeting a 1:1 or 1:2, so yeah, that's what it is. Thursday, and now we go to the Friday. Friday, I was looking for sales, obviously. Friday there was a supply zone, beautiful supply zone on M15 here, which I'll show you in a moment. Thursday, literally the market went down and down and down. It made a supply zone here on 15. According to the Asian range, we decide the zones we trade from, right? So just above the Asian range, there was a supply zone here, a beautiful supply zone. A supply zone was also here, but this supply zone got respected. So look at this buying pressure, huge buying pressure here on 11:30, which was retail sales, GBP news, and then literally sellers start coming in the market. To be honest, I would not take this trade due to this buying pressure. 100% I would not take this trade. And also the supply was not one of the best. As you can see in the hourly, the good supply was this one. So it is one of them trades where it just happens and we can't do nothing. But if I would have taken this trade, this would have been a winner. I could have held this till the previous daily low. It was a beautiful trade, but it is what it is. We can't catch them all, and we don't need to catch them all to be profitable in the markets. So this is the end of week breakdown. Hope you understand what I'm trying to say and improve.